Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is April 10th, 2025, and we're diving into the latest earnings report from Lovesac, the innovative home and technology brand known for its adaptable furniture. Joining us is John, our senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. Lovesac has certainly made some interesting moves this fiscal year, and I'm excited to break down their Q4 and full year 2025 results with you.
Revenue and profitability overview. Let's start with the top line. Lovesac reported net sales of $241.5 million for the fourth quarter and $680.6 million for the fiscal year 2025. John, how does this compare to their previous performance?
While there was a slight decline in net sales, down 3.6% for the quarter and 2.8% for the year, Lovesac managed to improve its gross margin to 60.4% in Q4, up from 59.7% last year. This margin expansion is a positive sign, indicating better cost management, particularly in transportation costs.
And what about their profitability?
Net income for the fourth quarter was $35.3 million, a 14.1% increase year over year. This was driven by strong execution in converting customer quotes to sales, despite a challenging macro environment.
EPS performance and analyst expectations. Analysts had forecasted an EPS of $1.80 for Lovesac, but the company reported an actual EPS of $2.13. John, what does this tell us?
This is a significant beat on expectations, with Lovesac exceeding the forecast by $0.33. It reflects the company's ability to manage costs effectively and capitalize on its strategic initiatives, even in a tough market.
How many analysts were surveyed for this forecast?
There were 2 analysts involved in the forecast. Despite the small sample size, Lovesac's performance is commendable and suggests strong operational execution.
Operational efficiencies and future outlook. Operational efficiencies seem to be a theme here. Can you elaborate on how Lovesac has managed its expenses?
Absolutely. SG&A expenses decreased by 11.4% in Q4, thanks to reductions in credit card fees, professional fees, and other overheads. This cost-cutting contributed to an operating income of $47.6 million, up from $40.4 million last year.
Looking ahead, what is Lovesac's outlook for fiscal 2026?
Lovesac is projecting net sales between $700 million and $750 million for fiscal 2026. They're also excited about new product launches, including the EverCouch, which could drive future growth.
CEO strategic vision. CEO Shawn Nelson mentioned some strategic initiatives. What are the key highlights from his statement?
Shawn Nelson emphasized the company's long-term strategy and value creation model. Lovesac has reinvented its supply chain and enhanced CRM tools, which strengthens their unique omnichannel business model. These actions are designed to position Lovesac for profitable scaling in the future.
How does this strategic vision align with their current performance?
The strategic initiatives are already bearing fruit, as seen in their improved margins and profitability. The focus on innovation and supply chain efficiency is crucial for sustaining growth and market share gains.
Key takeaways. In summary, Lovesac has delivered a strong performance in Q4 and fiscal 2025 with significant improvements in profitability and strategic positioning. Their EPS beat expectations, and they have a promising outlook for fiscal 2026. John, any final thoughts?
Lovesac's ability to innovate and manage costs effectively positions them well for future growth. Investors should keep an eye on their new product launches and strategic initiatives as potential catalysts for continued success.
Thank you, John, for your insights. And thank you to our viewers for tuning in. If you found this analysis helpful, please like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on Lovesac's performance in the comments below.